Hello. Good morning, everybody. It's Tuesday, so your favorite hosts, Tim and Tim, are back. Got to give you a little bit of energy here. It's a beautiful day outside, and I'm just really excited. There's been a lot of great things that's happened for Tim and I over the last couple of weeks. So I'm just super grateful, super blessed, and just want to share some of that energy. So, Tim, what's up with you, man? How you been?
Not much, man, but thanks for the intro because I needed that today. I'm dragging a little bit, man. Been up late working and my coffee hasn't kicked in. So yeah,
Yeah.
can't complain though. I can't
Yeah.
not
All good
complain.
things.
Yeah.
All good things. Well, hey, all right. So we got another guest with us today. His name's Karl Krauskopf. I knew I was going to butcher it. Did I
That's like
butcher it?
90% accurate. We're good.
90%? All right, I'm good enough. All right. So Karl is a good friend of mine. We've known each other for, God, at least a year and a half now. We finally met in person in Charleston not too long ago, but I really like Karl's story, and I think he could bring a lot of value to people listening to this show. So Karl, much like most other people, started his real estate investing journey flipping houses. He's based out of Seattle, Washington. So we're going to kind of touch on some of those things there, why it can be difficult to invest in a very high cost of living area. But now Karl, his led investment projects about $20 million, and he manages about $10 million worth of assets today. So Karl, thanks for being here. Why don't you give everybody a little bit more of an introduction and a little background of who you are, how you got started, and your story?
Absolutely. And much like Tim, I appreciated your enthusiastic welcome. Definitely did send a little jolt down my spine.
Good.
And like Tim said too, this coffee is still working. Being on the West Coast, it's 7 o'clock over here. And yeah, I mean, I've been up for a couple hours, but still nonetheless, it's still waiting on the coffee to register. So Karl
Well,
Krauskopf.
hopefully my intro was as good as your cold plunges, those chills.
Unfortunately, I have not yet gotten to that this morning. Having to push that off until mid-morning. But yes, anyway.
All right, go ahead. Sorry.
Karl Krauskopf, live in Seattle, Washington, was actually born and raised in Florida. So I noticed your surfboard there. Definitely have not yet taken the journey of bringing my 12-foot Islander from the east coast of Florida to the west coast of Washington yet. But certainly do love getting my rides in over here, Westport, Washington. Shout out. It's a great place to be. No sharks, which is one of my absolute favorite thing. There's been 2 recorded shark attacks in all of Washington's history. And I will take those odds versus the odds in Florida, where
Every day.
During this meeting so far, 3 people have gotten bitten.
You said you ride a 12-foot log?
Oh yeah,
that thing is a monster. Holy moly!
Borderline stand-up paddleboard, borderline surfboard. So works great in both environments. So again, have started back with real estate about 4 years ago. I am a 10-year vet in corporate strategy, business development, and spent just a ton of time working and building a company for somebody else years ago. Took a lot of those transferable skills, saw that real estate was this option to grow wealth, have quite a bit more flexibility and predictability. And then obviously we could kind of grow at our own pace, at our own rate, and control our destinies. So got into real estate about 4 years ago, and left my full-time job 2 years ago to be a full-time investor, in which I transitioned from flipping houses to ground-up development to multifamily. Had a lot of bumps and bruises on the front end. A crazy story, including my second or third flip that I bought was I was victim of a identity theft where somebody did a digital wholesale, sold us a property that was not theirs. And we went through the closing, the title and escrow, signed off on it, got it notarized. And all of a sudden, about a month after I started the rehab, I got a lawsuit from the actual seller saying that you guys have bought this property fraudulently. And about 2-3 months later, we went through the legal process, and come to find out, yep, it was fraudulently sold to us, and we had to give the property back. So on my second or third flip, ended up losing about $56,000 between rehab, holding costs, closing costs. legal fees, etc. So
I wonder how did he get past the title and escrow piece? And
know,
where's their liability on all of that?
So they ended up paying out the premium,
Ah.
which was great. Certainly recommend always having title insurance for that reason now, but it still didn't cover the rehab that I had already started. It didn't cover the holding costs and closing costs. This was done via hard money. This was before hard money was super cheap, but it was also still relatively cheap. So it was like 2 or 3 points and 10% interest back in, whatever, 3-4 years ago. So again, not my
that's
not
insane.
Yeah, not the best.
Somebody else is saying that too, but man, like you're just getting into real estate and that happens to you, that could absolutely crush somebody. Like make it so that they don't want to continue. This is the wrong industry for them. Talk a little bit more about like kind of the mental struggle that happened there and why you ultimately continued. I mean, because you seem fairly successful now, so everything seems to have worked out. But if you had quit there, I mean, it would have been over.
Yep. Yeah, no, absolutely. So from a mindset standpoint, yeah, it was absolutely crushing. It was, questioning again, whether or not this is the right space for me. Did I jump in too quickly? Did I not do my due diligence? And then I reminded myself, or, kind of was intrinsic about it of, look, before I bought my first property, which was about a year before this incident, I spent 6 months in self-education, reading every single book I could possibly get my hands onto, podcasts, audibles, etc. And again, it was a reminder to myself of, I did my due diligence, and then I talked to the industry partners, the folks that were involved in the both the wholesaler, the title, the hard money. I talked to basically everybody that was a stakeholder in that project, and they're like, look, dude, I've never heard of this ever happening.
Me neither.
This is such a rare occurrence that, the only lesson learned that I could really garner from this situation was know who your seller is. Don't do a completely digital transition or transaction, rather. Again, the only way that somebody could have known that this was different was having met the individual who sold us the property, who purported to be the seller, and obviously that person, his name was Jordan, was not actually 80 years old. So that would have been the only way that we could have identified that, hey, this is probably a fraudulent charge or fraudulent transaction.
Yeah, I've never seen one go all the way through. I've certainly seen wholesalers, fraudulent wholesalers, but they're just taking an assignment fee and disappearing. They're not actually going through with the sale, right?
Right.
So that is pretty crazy. Definitely pretty crazy.
Jordan is a strange name for an 80-year-old.
I have not met one like that.
And maybe if his name was Karl, I would have been a little bit more. Anyways, all right. So, man, that's a really unfortunate situation, and I'm glad you kind of stuck with it. So, from there, what happened? Like, so you had this catastrophe. You did everything right. It wasn't no fault of your own, right? Where you've done all the things. You got the title insurance. You had professionals that close property all the time, legal attorneys, everything. Everybody missed it. So it wasn't a you problem. It was an everybody problem.
Yep.
So what happened from there? So did you continue flipping houses and what happened?
Yep. Continued flipping houses, ended up flipping. So that was, again, within the first year of getting into flips. Spent another 2 years actively flipping, where I flipped a little over a dozen homes over those 2 years. And these, transitioned from kind of the cosmetic carpet paint, kitchen style flips to studs out remodels, foundation jobs, where my primary product here in Seattle was I've done homes as old as 1907, and the majority of them were built from 1907 to 1950. So it was a lot of, again, working with old archaic systems, upgrading the electrical, plumbing, and HVAC, going down to the studs, doing foundation jacks, and everything in between. So again, really cut my teeth from a construction standpoint, rehab standpoint on that side of things. Ended up organically growing a small investor base, albeit, folks that were in corporate that saw me on social media, which I certainly was not very active on, right? I was not consistent in my social media and my marketing standpoint back then. I'm still working on it today, but certainly was not active then. I'd post a couple pictures of rehabs and folks would reach out, hey, doing great. I've always wanted to flip a home, but just don't have the time. So started those conversations around JVing together, performed for them, ended up performing for a lot of different JV partners, and moved those into full bore syndications on the ground up construction side of. So started putting up townhome projects, building 5-6 townhomes at a time in syndicated models. Again, did quite a bit of successful exits over the last 2 years, and again, organically grew that investor base and transitioned into multifamily housing alongside the inflation and recession scares back in what was this, 2020, late 2021, when we started seeing inflation tick up.
Yeah. So Karl, talk to me about like managing these things. Are you hiring like a full scale GC, or are you kind of project managing all this yourself and just dealing with the subs directly?
Good question. So when I was doing flips, it was the latter. I was project managing all the subs, and it was stressful. It was absolutely the most stressful, most time consuming part of real estate that I've ever been in. And it's not my strong suit. It's not my sweet spot. It's not where I prefer to operate in. And, obviously it was difficult managing a deal flow, investor relations, and the operations or project management of those large scale flips. So, at this point, starting with the ground up construction, I started hiring out full board general contractors, which I've had great experiences with. I've also had bad experiences with. And those that have had bad experiences, I would say the number one lesson learned is get your damn lien waivers. Get lien waivers. That way you can have a clear, documented approach to payments, to work completed. And then on the back end, when they're trying to inflate cost and charges, then you have something to lean back onto and say, no, we signed off on this. You signed off on this. There's no additional cost associated with it. If you want to charge me, you can't, because you've unconditionally waived your rights to charge me. And, obviously from a flipping perspective, you're dealing with contractors who are, more or less bottom of the barrel. When you get into the ground up stuff, you get a little bit more of a professional setting, but still nonetheless, you've got generals even in that space that will try and charge more because they've got other projects that are bleeding. They've got their own projects that are bleeding. So get your waivers.
Yeah, that's a really valuable lesson learned there. And you do this, guys, you do this long enough, you're absolutely going to run into what Karl's talking about there. You get general contractors who take on 4 projects at once, and one project's bleeding, and they'll start to borrow from yours to try to keep that one afloat. And Karl's right, you got to really look out for that stuff. So did you kind of learn that with the ground up stuff, or did you kind of figure that out like doing flips? Because that's not, I was going to say, that's not something people just walk into and they think about, right? Like you usually learn a lesson the hard way before you figure that one out, right?
Yeah, absolutely. And back to that point, one of the lessons learned there was so talked about the home that was fraudulently sold to me. One other property that I bought in kind of at the same time or tangentially to that property was I put into the hands of a general contractor. This was a property that was about an hour and a half away from me. It was closer to him. So I was like, oh, cool, this will work well. We had done a project before, and same situation ended up happening we got down towards the end of the project. He's taking pictures of me saying the job is done. And then I get there to, trust but verify. And all of a sudden I'm noticing that he's taking pictures, strategically taking pictures in positions of the room that make the project look complete. So that way I can wire him the appropriate funds.
Yeah.
So example being that I got a picture of a fully carpeted and fully floored home, but when I get there, oh, by the way, only 20% of it's done. It's just, or, 20-30% of it's done. And he's just taking pictures of different angles. So, yeah.
Wow. You learn something new every time, huh?
Oh,
every time.
the tricks are numerous.
Oh, golly, man.
From there, it was like, get onto Google. How do I prevent this from happening again? And lien waivers was the one thing that came up.
Yeah.
Yeah.
Wow. If you take away anything from this episode is get your lien waivers. That's absolutely one of the most important pieces.
Hey, sorry, not to go too far down that rabbit hole, but Karl, like what's your best strategy for getting a lien waiver? Because from my personal experience, that's not something contractors or subs typically just want to give, right?
Right.
So I guess the question is, why would they not want to give it?
Oh, general contractor, when you're signing contracts, so you're doing fixed price, you're doing fixed bid.
Yeah. So I've done a combination of fixed bid and then cost plus, either cost plus margin or cost plus flat fee.
Yeah. So every now and then when you get into it, right, like this is the argument they'll give you, right? You got a 60-day project. They can't control costs over that 60 days. So,
right.
They're gonna come to you and say, hey, this is what I think it's going to be, but I need to be able to protect myself, and my cost moving forward. So that's an argument against it, right?
So I think that would be an argument against a GMP, a guaranteed max price contract, not necessarily the lien waiver, right? So, the process that I have is I get an invoice for $100,000. The invoice is comprised of framing, lumber, foundation straps, and concrete pour. So the process there is I have the contractor sign a conditional and an unconditional lien waiver. Conditional lien waiver is essentially saying the contractor and I entering into an agreement saying that once I pay you for this work, neither you nor the sub has any right against me or the project to lien for either foundation or lumber or framing associated with anything prior to, May 1st. You get that signed. That's typically an easy conversation. Once you start getting into the big projects where, I'm talking millions and millions and, tens of millions of dollars, you probably start having a conversation around, is escrow potentially necessary in order to get those conditional lien waivers signed. But we're not at that point right now. No. And then you've got the unconditional lien waiver, which essentially says you have paid me. I, as the general contractor, have been paid. Now I am unconditionally waiving all rights against you, this project, to charge for this type of work.
Okay, so you're capturing lien waiver as you pay along the way.
Correct.
Is that okay?
Correct.
Yeah. Sorry, that was a misunderstanding for me. I was thinking you were saying at signing of the contract up front, you're capturing lien waivers.
Yeah. No, you're absolutely right. I think that would be. I don't think anybody would sign up for that.
Yeah. I was gonna call you after this and go, how the hell are you doing that? Because I want to put that in.
No, but it's a good question. I think again, lien waivers, it's a laborious process for sure.
Yeah.
But it can really, depending on how much you're spending, it can really save your butt from exploding contract prices.
Yeah. Well, and it helps, right, when that sub shows up saying they haven't been paid, right?
Yep. And you had mentioned something about, on the guaranteed max price that I'd love to hone in on is, how do you get a general contractor to sign up for a GMP price? And so far in advance, one thing that I've done in the past and I love to do is, in partnership with the generals and showing, that we're looking to be a good partner with them, is give some kind of elasticity to the pricing, specifically around commodities, right? So, we just got out of this incredibly volatile commodity pricing environment, specifically on lumber. And it was difficult for generals to truly forecast what cost of lumber would be when there was, a 90 to 120 day gap between striking a contract and even purchasing the lumber. So, we'd get specifically for volatile commodities, would give some elasticity and allowances specific to just those line items. Whereas framing labor, I mean, go get your bid, go get the bid for the framing. That's not going to be that's not going to be elastic. You're just going to have to manage the framers' expectations.
Mm-hmm.
Yeah. That's really good stuff right there. Yeah. Break it down between, like those materials versus just the labor involved. Right.
Right. And even, even get specific on the materials too, right? Instead of material elasticity across the board, it's just look at the big drivers of cost, typically lumber, concrete, windows and doors. Those are
the big ones.
Yeah.
Right.
Interesting, man. That's a really great information. So, all right. So you were flipping the houses, and then you're doing the ground up development, and you learned a lot of lessons there. Talk about that transition from doing just kind of smaller properties to bigger assets, because you have a ton of experience and you bring a lot of value to the table. How have you taken those experiences and kind of plugged into either syndication groups and your development projects and things like that to bring value to the people that you're partnering with?
Sure. So I would certainly agree with the idea, the phrase that, going from a single to a multi or larger project really isn't necessarily a linear effort increase, meaning, you're going from one home, a single asset, a single family, to a 30 unit complex. It's not 30 times harder by any means necessary. And so I think I adopted that mentality. And, I certainly have a ton of mentors and giants around me in both the syndication, the construction, and the multifamily space that I've heavily leveraged their experience, and, have really taken a lot of what they have to say into heart. And, a lot of these people, it's, personal friends, whether it's vacationing and or going on hikes with them, really certainly leverage, those times that we're together and, asking questions. And then, obviously it's not a one-way road in having conversations and building these relationships with mentors. It's, how else are we providing value back to them? And so for one instance was, I found a plot of land that was commercially zoned, that was on MLS, Northwest MLS, like on Redfin, where it should have been probably better marketed elsewhere, whether it's Crexy or, whatever it happens to be, and ended up bringing that to, one of my syndication friends who's in the commercial space. And, it was, hey, saw this, thought of you, did some kind of rough feasibility myself, drew up some kind of storage unit outlay, and pass it over to him. No expectations of commission, no expectation of fees, etc. And it was just truly a value that I felt, was something that I could bring. That's, took me 20, 30 minutes. He ended up closing on it, developing it. And, the group itself made a load of money. So figuring out ways that you can bring value to your mentors beyond either this isn't, I don't have a paid transaction or paid coaching program, but, figuring out other ways that you can bring value to them without necessarily going to them and asking, how can I bring value to you?
Right.
You talk to most of those folks and they're like, don't ask me that question.
Right.
Go figure it out.
That's incredible, dude. Like, God, I feel like a broken record when I'm talking about find a way to do something for somebody else with no expectation of return. Like literally no expectation of return. And I guarantee you, if you sacrifice now for what you want later, you do something like that, the law of reciprocity will pay you back. That payment, right? That gesture, that offer, that genuine offer will not go unpaid. And it might not be paid by that individual person. It might be a person's person, right? Like you have no idea how far that relationship is going to go, but that single person will always, in some way, shape, or form, feel indebted to you and will likely end up helping you out either by being a mentor or being a partner or getting you involved, or like, if you're involved and you're learning from them. I mean, that is incredible value. Like we talk about it all the time, is get into your first deal no matter what. Now, like any way that you need to do it, find a way to bring value to the people that you're trying to partner with without expecting anything in return, and get a seat at the table in some way, shape, or form. And it seems like very kind of like, oh, Tim, I've heard this a million times. But like at the end of the day, like that's how I got started, right? Yep. Those are the principles. That's how Tim Vest and I became partners, right? It was providing with value and, just doing things without expectation of return. And then over time, you're like, wow, actually, you know what? I really kind of like this guy. Like, let's do business together. That's how it works, right? Yep. That's why real estate as a whole is explained to be such a hard business to get into, because it's all relationship based. All of it is. So if you're not good at building relationships and providing value to other people without selfishly expecting something to receive something in return, how are you going to build a relationship with somebody that's doing something that you want to be doing that you almost have no value in because you have no experience doing it, right? You got to find some other backdoor entryway to bring value to that person and get a seat at the table.
And I think if you were to bifurcate it between the intrinsic and the extrinsic, or the outgoing and person that's not necessarily as outgoing, the people that are really outgoing, it's a little bit easier for them to kind of get in the conversations and get that started. But the people that aren't outgoing, that like to stay behind the scenes, it's actually, if you think about it, probably a little bit more valuable for them, or rather a little easier for them to be truly valuable, in that they're going to be the ones that go out and do the research on the person and figure out what is truly valuable to this person. And so, I recommend, again, not just going to somebody and saying, Tim, how can I provide you value? It's, hey, spend 10, 15 minutes on their LinkedIn, on their Facebook, on their website, figure out what they're buying, what they're doing, and then see if you can't find something to match that. And then in the initial conversation, hey, Tim, I noticed that you're buying, and I noticed that you own an apartment in Charlotte. It looks beautiful. It's fully renovated. That's great. I want to make sure, who's your property manager? I've worked with this property manager in the past. They're really great at managing fully renovated projects. They have a really low cost basis. Just want to make sure that's on your radar. Something like that it's, again, it's easy. Didn't take a whole lot of time, but it shows a huge gesture of thought. And
you got to find what is valuable. You got to fix a problem that person doesn't even know they have.
Yep. Yeah. Tim and I talk about this every now and then. We're not to get too deep, but we were in this group for a while where it's very common for people just to call, new members just to call, and at the end it was like, how can I help you? And I'm like, and Tim and I would talk about it, we're like, I don't know. I like sitting here today, I don't know. But at the end of where those conversations ultimately went, it was kind of like, you're kind of putting it on me to tell you how to add value.
Yeah.
Like,
you're giving me a job. That's a complete opposite of what you're trying to do.
and at the end of the day, when they would come to us, Tim and I were like, not to be mean or anything, but Tim and I were so busy with everything we had going on. I'm like, I literally don't have a second to stop and think about this. Like, I'm like, so I started telling them, I'm like, I tell you what, you think about what you bring to the table and just drop me an email and let me know. Like, hey, if you need somebody to do this, let me know,
Right.
Right. But I really like your approach, Karl. It's like, hey, I came across this. I know you do development. This isn't my wheelhouse. Maybe you're interested. Here you go. Right. Like, and Tim and I do that kind of stuff all the time.
I mean, it's one thing when you're trying to do it to get started, right? Because a lot of people that listen to this show or watch, our weekly show, they're trying to do what we do, right? So it's one thing to kind of get on a seat at the table first, but then once you're at the table, it's continually doing that to grow your network and grow your reach in order to help more people. Because I know I don't do self-storage, but if I know like a self-storage deal comes across my plate, I know who I'm going to give it to. Right. Or make the introduction and be like, hey, I can't do anything with this, but I know this person can. And this is a great deal. Here, I underwrote it real quick. Do what you will with it. Right. I mean, it doesn't take me long to underwrite a deal, but that could be incredibly, incredibly valuable to somebody else because they hate underwriting and they didn't have a deal before. Right. So like, look at that. Now you got 2 check boxes on your side of the table saying, I did this for you, but I don't care. Like, I'm not looking for anything in return. Have fun. Go make money. I want to see you crush it.
Right? I love what you said right there, Tim, because guys, because I get deals all the time, right? People pass me deals all the time. But one of the most laborious things for me to start with is like sitting down to do the underwriting.
Yep.
And you're already giving this guy the head start. You're like, here, like it may only be 80% right, but here's the start.
framework. Go tweak it based on your industry knowledge.
Yep.
Yeah. But man, I got deals sitting in my inbox that probably are deals that I'm like, I don't have time to sit down and go through the underwriting, you know?
Right.
So that's awesome.
Well, any of the North Carolina properties that I'm underwriting that either just don't work out for us or I've got a pricing range on it, happy to always send those over to you. Obviously, I'm fully underwriting these. And Tim, you know my underwriting style. And
yep, I've looked up plenty of your deals so far.
Yep. So happy to pass those over where they don't work for us, and
yeah,
see what you
right. And you know, it's funny that some people might take that as, here, I'm going to give you all these crappy deals. No, it's not that. It's like Tim and I live in the markets. We have different economies of scale. We have different relationships and different abilities. We might be able to make that deal work based on our relationships that we've built. It's not that it's a good or a bad deal. It's just we can operate it differently.
Right. And, you know, from somebody coming out of state who doesn't necessarily have a deep footprint in the market, I'm going to be underwriting my rehabs higher. I'm going to be underwriting all of my OPEX higher because, again,
your cap rates
I know
are probably going to be marginally off.
Yep.
You know, it's like it's those little tweaks here and there that can make or break a deal that we know in these markets, because that's where we buy, that someone that's out of state might not know. Right. So, yeah.
Love it.
Yeah. And I always love it when people bring like and maybe this is just a little bias for me. I always love it when people bring a flipper's mentality to this, because flipping, sometimes those margins can be so thin, right? Like, and that's one of the reasons why we project manage our own flips, right? Sometimes there's money to be made, but if I pay 20% of it to a GC, it's just not worth it, right? But I love it when people bring their flippers mentality to it, because you see that, like you really are so like tuned into those costs and those little fine points.
Yeah. I think, you know, that's certainly you know, a big benefit on my side, and being able to leverage that experience. You know, I was joking with a LP the other day of, you know, we're talking about my transition from flipping to multifamily. I'm like, yeah, I don't flip anymore. It's terrible, too stressful. But then I was like, wait, I'm not flipping single family homes. I'm flipping apartments. And, you know, now instead of a single unit, it's 30, 50, 60 unit. Obviously it's spread out. It's a lot less work, meaning I'm not doing full luxury flips, you know, down to the studs, etc. So it's a little bit different, but still nonetheless, it's, you know, a lot of rehab.
It's the same, but different.
Yep. Yeah. You're uncovering maybe less surprises, right?
I don't know about that.
It's when you take the sheetrock off the wall, it's kind of a little crazy about what you might uncover there.
Yeah,
man, sheetrock. I would love to take sheetrock off the wall. It's either been lath and plaster or what's that old wood paneling style stuff.
Yeah, I know what you're talking about. Yeah,
yep.
That nice like faux paneling. Is that what you're talking about?
Yeah. You know, the best is the plaster. You know, that's just it's a mess and it takes forever.
Heavy too. It's expensive to dump. I had a home studs at remodel that I had 3 layers of lath and plaster. The subcontractor, obviously nobody knew it, but he gave me a guaranteed max price of let's call it $7,000 for the demo and haul. And we'll come to find out 3 layers of lath and plaster that unfortunately ate into his margin a bit.
Yeah.
Well, all right, Karl, that's all the time we got for today. I had a blast talking with you, man. It's always fun and exciting. I love to hear kind of your experiences and you know, the things that you've learned and the kind of the struggles and things that got you through, because, you know, real estate's not easy at the end of the day. So, you know, we don't always just talk about the wins. We love talking about the losses, because those are the times that can sink you, right? Is when you're struggling and everything seems like the world is crumbling around you. You got to, you know, pick up and keep moving forward, because, you know, one incident is terrible, but it's not going to kill you. So,
right.
All right. Well, appreciate the time, and we will talk to you guys next week.
Peace. Love it. Thanks, Tim.
Take care, guys.
Appreciate it.